Okay, so the outline for today is how to do a study. There's been a lot of questions on how you go about it. What do you have to do? Is there any shortcut? Some easy way about, doing a study and getting things done quickly. What are things that I do and ones that have worked for me in the past? Something like the HB edge or the whole number edge or the undercut hold and hold. How do you come up with these? Um, and how have you developed them over a span of time? So the first topic we'll cover is what's the goal? And if there's benefit in automation versus a manual study, how there are different benefits to each. We'll discuss those. And one of the most important ones is that things work in certain market conditions and they don't work in other market conditions. So a edge, a setup, anything that you study in the market works for a span of time in a really specific market condition, and it won't work in other market conditions. There's no such thing as one particular setup that you can develop that maybe works to the upside and the downside 365 days, 252 days a year, or whenever the market is open. It's doable to find such a setup to the upside and downside, but for the just to have some clarity or edge or very defined setup, you need to have specific market conditions that are met for it to have a higher probability or a higher win rate in those conditions. A slide on warnings, tools that I use on a day-to-day basis that assist me, and then we could open it up for Q&A where you guys can raise your hand, unmute yourselves, or you can post the questions in the Q&A tab, and I can answer those as we go. So how to do a study. So basically, the essence of what we're trying to do every time we do a study in the markets is we want to find some sort of consistent edge. And this word is often overlooked because things work. If you have an edge that works 51% of the time and one that doesn't work 49% of the time, if we take just these statistics and we run that trade over a span of 200 trades, for example, a year or 2 years or 3 years, what have you, you should come out on top. So you should be profitable even if it works 51% of the time and it doesn't work 49% of the time. If you're looking for an edge that works 99.95% of the time, that's called a scam. So scams don't work. So there's no such thing as guarantees and 100% in the markets. Everything has an expiration date. Everything has a certain environment that it works in. What we're trying to find in the markets when we do a study is if I can just edge out over, if it's a 51.49 edge that I have, that's still good enough for me to make a lot of money in the markets. And that's the mindset that you must have. If you're out there looking for something that guarantees you money or something that works, it's just not, well, I haven't found it yet. And if you do, you can definitely let me know and I'll hop on board as well. What's the goal when you do a study? So one thing that it does is it builds your confidence, and confidence is very important in trading. So one thing that we experience when we have a good trade in the markets, we buy something, it goes up 10%. We buy something, it goes up 5%. We feel good, and we get more confident when we string together a bunch of winners in the market. So when you do a study on a specific setup, edge, what have you in the markets, any concept, you could take, something like as simple as PC ratio, and you do a study, you'll really know what PC ratio is about, when to use it, when to not use it, when is it useless, and when is it going to help you the most. So what it does is it builds your confidence and you become a subject matter expert. So this is important. These two things yield or bleed directly into performance. A lot of people, and I would even challenge you guys, a lot of you tend to follow what is being said by someone that you feel is a supposed expert at it, but you don't really prove it to yourself. So you take a stat, William O'Neill says 37% of a move is based on industry. Go prove it to yourself. And once you do prove it to yourself, you'll use it in your trading a little bit more than just taking his word for it from 50 years ago or 40 years ago and just incorporating that into your trading. So if you go out and study this stat and you could prove it, maybe now it's 35%, maybe now it doesn't even matter, it's at 25%, then you'll have that confidence to either incorporate it into your trading or not incorporate it into your trading. So doing a study, you become a subject matter expert. If the goal of it is you go through the paces, and if anybody's asking you any questions with regards to that specific edge setup, what have you, PC ratio in the markets, you can fire back at them and say, I've done a 20-year study on this, and this is how I feel it can help me, or it just doesn't work for my style of trading. It builds you build a feel for the market when, for example, when we look at HVE, or the way I treat HV1s, I treat HVEs a little bit differently than HV1s because I've seen more success in HVE setups. So you get this feel for the market, what kind of environment this HV edge can work in and what kind of environments it's going to be under pressure and it doesn't work. And so once you develop that feel, you can trade on that feel, and it yields better performance and results. Every time you're trading on a state that you've been in the past and you can relate to some other situation and you can feel the action of the market going up and down, that is how the best traders are sort of performing in the markets at a high clip. It's initially you could be consistent and be mechanical, but there's a threshold that you break above after being consistent and being mechanical in the markets that is based on feel. So you could wake up, you could see sentiment, you could sort of see oil stocks getting heavy, and you'll hit you'll hit an oil trade short one of those names and it yields you a 6 to 10% result. Because you've seen the situation before, this euphoria before, and in this type of market environment before, in a certain theme, so that you can target that based on your feel as well. So I'm a big believer in this, that at some point in time, you'll just take a look at, I've seen this stock. This reminds me of Roku in 2014. This reminds me of this stock, steel stocks in 2015. This reminds me of this. So you connect those states. And when you do a study on a historical basis and real-time basis, you're just morphing that feel in your head and it yields greater performance. The goal of doing a study is also to make things a source of income. So if you have a blank piece of paper, just write down the streams of incomes that you have in the markets, and you can name them and what they yield, how they contribute to the overall sum that you make on a yearly basis. So just doing this exercise, it will tell you, the reality of your trading. It will tell you the reality of your trading on what is working, what isn't working. And you could really, maybe if I study this a little bit more, I can get more income out of it. Maybe if I drop this setup because it's not really making me any money, then you could do that as well. And all of this sort of boils down to your self-leadership, how you carry yourself, how serious you are about making an income from the markets. Do you listen to others and not prove it to yourself? So you have to prove everything that you do in the markets to yourself. If you borrow some sort of stat, even as William O'Neill, great trader, legend, what have you, but if you can't prove it to yourself and you're just going off of that, you won't really have conviction that will bleed into your position sizing. So every component of your trading, when you're doing a study, to polish that component and make it a source of income, you have to prove it to yourself. You can't listen to me, can't listen to some people on YouTube. You can't scroll your Twitter feeds looking for these things. It has to come from you. It has to be internal. It has to be proven to yourself so that you can execute on that. And this is non-negotiable if you want to be successful in your trading. So this is what the best of the best. So when Minervini writes a book, he's not pulling stats out of his, you know what, he's gone out and actually studied the winners and he came up with these stats after doing these studies. He wrote a series of 3 books after doing these studies. So there are people that like to consume content. There are people that like to go study it and use their own content for their own trading. Try to be on the other side of the spectrum where very few people go out and study those setups, their edges in the markets, and they prove it to themselves. Those are the top of the top, the 5% that succeed, whatever the stat is. Those people are doing that. That's why they're succeeding. Whereas the others that fail, which is the majority, are not doing that, and that is why they're failing. So any questions on this particular slide? And if you let me know if my pointer is still working, so that I'm not coming across as frozen. If no questions, I could carry on. I'll give it another 10 seconds. Cool. So the next thing that I want to cover is automation versus manual study. So this is debatable. And I'll give you guys an example is, everyone wants to study an edge for 1 to 3 weeks, right? We want things quick. We want, I want to start a study in a setup. I want to finish it. I want to master it in 1 to 3 weeks. And the 4th week, it should yield me such a big return that I need to quit my day job at that point and not do anything else. That's just not how things work. It takes quite a bit of time to really master something. And I would say it takes a few years to sort of have that, that concept edge, what have you, that you're studying in your back pocket and use it as a weapon in the markets, because you know when it works and when it doesn't work. So it takes time. You can't beat time. You can't beat, real-time study in the market. So when I say real-time study, I'm talking about this day-to-day study where you've picked an edge and you want to study it over a span of time, and you see it working in some market environments, you see it not working in other market environments, and nothing really beats that day-to-day experience as you refine your edge slowly over a span of time. Nothing really beats that. You learn on the fly, you consume data. Okay, I executed the same setup 10 times and it worked 4 out of 10 times. What's unique about when it's working? What's unique about when it's not working? And all of that really comes down to journaling and how you sort of write that out day to day. And now you have a span of say 3 months and 6 months and 12 months of data on this really specific concept that you've been tracking over time. And now you know exactly when it works, and you know exactly when it doesn't work. You try to execute it more often when it's working, and you try to stay away from it when it's not working. If you look at the BP edge, or how I've been approaching the markets, I know that when the market is going to respect my IP levels, the green light turns on and I execute. And as soon as I see disrespect for the IP levels, or we go up into the upper IP levels and we're chopping around, I sense it, because I've seen it so many times that things are about to turn back to the downside, because there's absolutely no respect for the upper levels. So things have to come back in. How do you develop that? That's an iterative process in small pieces and chunks over a span of time. It's not 1 to 3 weeks. You figure it out and you're ready to go. It just doesn't happen like that. If it was like that, you would have Wall Street with a bunch of millionaires and billionaires and nobody working day jobs. So it takes time. You come to that conclusion. Don't try to skip steps. It's going to, if something doesn't work, that's information you could take and write down. If something is working, that's information that you could take and write down. And over a span of time, you'll get so good at this one specific concept that you could use it as a weapon in the markets when you choose to do so. So unrealistic expectations yield disappointment. And a lot of people come in to TL or anywhere they go trying to seek some sort of knowledge. They want instant results. They want 1 to 3 weeks. They want it now. I've paid you the annual fee, and I want to be a good trader right away. It's not going to happen. And we say that often. Is it just because you signed up and paid for a service doesn't mean you're just instantly going to get better. You still have to go study, internalize, do your own, build your own conviction, confidence in it for you to execute at the same level that I may be executing at, Ross may be executing at, and you can't skip time. So study it historically through automation. I believe, when you go back in time, it's easier to, run filters or data and collect a bunch of HV setups and study those, but also study it real time and day to day. So as you build more conviction through different market cycles, right? So if we're not studying an edge through different market cycles, so it could be an uptrend, it could be a market under pressure, it could be a downtrend, the way IBD classifies it. So does your edge work best when this definition is met? Does your edge work best when this definition is met? So you need to know everything has a window it works in, everything has a window it doesn't work in. So run your study through its paces. Don't go out, study it one weekend and go out and execute on it, lose money, move on to something else because that thing didn't work for that 1 week. That will keep you in a loop where you'll never finish finding this 99.9% win rate that you're seeking, which is basically a scam. You're looking for a scam in the markets, and there's no such thing as 99.95% win rate. So iteratively gather examples. I mean, OneNote, if you have it, it's a free software. You can make a lot of tabs in it. You can gather examples over a span of months, weeks. I know Oliver Kell, he does, he has OneNote. If you see his OneNote workbook, there are a whole bunch of tabs and different things that he's studying, and he's literally most of the day just clipping, examples, putting them in, and then on the weekends, just visually reviewing them so that when it's time to execute, he has this visual memory that he's built, and he's sort of keeping track of things in OneNote. So there's no secret to his success. It's a whole bunch of hard work and intuition and developing a feel for the market and executing on that feel most of the time. So gather iterative examples over a span of months and years, and you'll get better at it as you execute on that same setup or edge that you're studying. Another example is Mike Webster's Market School was sort of built from scratch. The story I've heard from Ross is William O'Neill wanted some rules developed to help, the everyday traders. They started this whole market school package. Mike Webster, I believe, led it with Charles Harris and a few other PMs at William O'Neill. And it took them several span of, years to sort of come up with these, solid rules so that people can follow these particular rules and sort of, have some structure to their trading. And that didn't take them 1 to 3 weeks or 3 months. It took them, they improved it. They ran it through its paces over a span of time. And then they came up with this whole structure. It wasn't, they wake up and things just happen from their experience. They had to go back, study these really specific things, come up with definitive rules that people could follow so that they could pitch that particular study to people. And that took a span of years and not months. That's just an example that I wanted to share with you guys as well. So any questions on automation versus manual? The gist of it is automation you could use for historical. And it's really, I feel is the most important part, is to do it manually. Iteratively gather your examples, use the snipping tool in Windows or the screen capture tool on Macs, and gather your examples daily. There's really a lot of learning in doing this than this. It's good to study it historically, but I think a lot of the learning, the real-time learning, as you go day to day, you see your edge working. In some conditions, you don't see it working, and that's real-time information that you're getting from the current market structure, not something in 1970s or 1980s, because definitely some of the market structures have changed over time. Things have gotten a little bit faster in recent times, whereas things were very slow back in 1970, 80s, and then they got fast in 2000, 2001. So this part I feel is important. Use OneNote to keep those examples. Any questions on automation versus manual? Looks like no questions. Let's be doing a good job. So let's talk about different market conditions a little bit. So different market conditions basically boils down to, just give me 1 second. Yeah, so different market conditions boils down to knowing when something is working and knowing when something is not working. So I've said this already a few times. This is probably the most important part. If you're doing a study, you could just keep a simple log. This is my setup that I'm studying. This is the market condition for it as one of the stats. And then you could keep it simple. You can maybe use the BP methodology, above BP, below BP, or you can use the IBD definition if you want to be doing that. Or you could use something as simple as I've seen people use. The market is above the 10, moving average, 10 DMA or 8 EMA, what have you. But as long as you consistently define what the market condition is, I feel that will tell you, this setup, it worked, it didn't work, it worked. And then as you have more check marks, you'll see a theme in the type of market conditions that a particular setup is working in and it's not working in. And I feel like this is really important. As much as we want a particular setup to work to the downside and the upside at the same time, it's very rare to find that. Something like the whole number setup is sort of built to work on the upside and the downside. If you notice, for example, snap at 40 recently, we came in, we chopped around 40, and now we're back at 30, right? So as soon as we built this disrespect for this 40 level, we came back in and down, but that was also due to the market being below the BP as well. So that sort of adds, some level of difficulty for it to respect this 40 level. So keep a log of those. There's no real secret to it, to be honest. If you have a setup, you could just say, this is the HV setup on this particular chart. The market is doing this, and did it work or did it not work? And you overspend a time, you'll see that, okay, this thing is working 60% of the time when the market is above the BP, or the market is above the 8 EMA, or the market is above the IBD, uptrend definition, and it's not working this 40% of the time. In that case, that's a powerful stat. It will lead again to position sizing, conviction, performance, and all those good things that allow you to make money in the markets. Highlight the weakness. So something that's important. I know the weakness of my system at the moment. If we just, again, take this BP IP edge, for example, I know what the weakness is. There's some signal noise that we get where we reclaim for one day and then we come back down, or else we would have been in a down. We would have been at about day 40 already. So I'm aware of that weakness of the system. And now I'm like, I'm working day to day to sort of improve that edge. It's not going to happen over time. I don't want to make changes that are really random overnight, and then it puts me in a state of confusion and I lose my conviction in this particular edge for the times that it does work well. So know your weaknesses of it and try to avoid those areas where your edge is weak. That, again, it minimizes your loss in that particular setup that you're studying, and it allows you to avoid like the spans where it's just not going to work in your favor. Another example for me is this HV edge when we're below this BP level is suspect because the market remains under pressure, and we've seen stocks like BMBL, Snap, and the list is long that are just not working, even though they exhibit HV1, which is the highest volume in over a year, HVE, highest volume ever, HVIPO, right? So we've seen that the probability of these setups working when the market is below BP has been lower. And that is primarily due to, again, market conditions will not allow the supply and demand to work itself out because there's consistent pressure to the downside. So the HV edge has a high probability of working above the BP. We all know that because you have the market behind you, you have the supply and demand, being skewed in one favor, and everything's sort of pointing in that one direction, which is to the upside. And that's when we see that this particular, HV1, HVE, HVIPO tend to work out a lot better in those market conditions. So any questions on market conditions? Be happy to answer them. So there's a question here. It says, for a study, how do we potentially find losers? Cases where the setup failed for stocks that were not a part of study. So a lot of that I would say is that we covered in the last slide. How do you find losing cases? Again, it's not something that you can run a scan on and magically find it. It's this part of it will tell you. Nothing beats the real-time study, the day-to-day study, as you log examples of when things are working and not working. So if you're looking for some magical scan that is just going to give you a bunch of losers and give you a study and you have everything in front of you and you don't have to do anything, there's just not something that exists. So I feel this manual part of it, which is the real-time study, the day-to-day study, will yield situations where things are working and for you and things are not working for you. The next question is, when you're gathering data, do you only choose historical examples when your edge worked or just when the conditions have been met? That's a good question. You want to study both sides of the coin. It's not about studying only when it's working. It's about, like I said, finding situations where, for example, for me, when I start seeing friction around the IP levels, I know that that edge is gone. It's dead and gone for me, at least, and I can't have conviction. So the last two sessions when I haven't really done anything, I could have had downward bias, but sure as hell can't have a bullish bias when I see friction around those. So I know that weakness in the system where when we chop around a level, I know it's not going to perform at the same clip, especially if I continue to come in with a bullish bias. So I study both, always study, know your strength, know your weaknesses, know when it works at a high clip, know when it doesn't work at a high clip. So I've noticed that chopping around is when you have to be careful and stay out or take positions, take protection against positions. Yes, I don't really take protection against positions. For me in the markets, if I have a pivot and the market is, going to go through that pivot, I want directional movement from my pivot. I'm not going to sit here and buy a long position, then buy puts, and then make a mess of my portfolio trying to, juggle both sides at once. It just doesn't work for me that way. Okay, we got one question. We got two people raising their hands. So Neil, you could go ahead.
All right. Can you hear me?
Yes.
All right. Question. When I think of doing a study, in my mind, how I was approaching it was, I look at historical, let's just say, 5 to 10 years worth of HV data, right? And then I see what's the average, win rate and average gains and average losses, right? To define certain probability of a trade working. So, on this slide, you mentioned a setup working, with a check mark or not working. I guess I was trying to correlate working or not. What do you mean by working or not working? Is it pertaining to, the probabilities that in my mind, I'm thinking?
I would say, so when I say working versus not working, let's say we have a setup and you could define any, let's say DTL breaks, right? DTL breaks. Now you notice a situation where something broke above a downward trend line, then you log what the market condition and what was the market condition, right? You could use any of the definitions, EMA, whatever you want. you notice that detailed breaks continuously work when the market is above, let's say the 8 EMA, for example, right?
Mhm.
Now you have a stat that this particular setup tends to work more often in this particular market condition.
Mhm.
And then you could define that. That's another thing. I don't like being arbitrary in terms of, this thing happens and 2 days from it, is it up or down? That's way too, it's way too, you're blanketing something. You're trying to automate to a level where you're taking human intuition out of it, right?
Mhm.
If you want to say, okay, every time I see a DT, every time I see a HV edge,
Mhm.
this is the bar, and what happens 1 to 3 days from it? Does it do this? If it does this, then it's a good edge. And then if it doesn't do that, if it does this, then this edge is horrible, because I can't just, you can't take human intuition out of when you're doing a study, is what I'm trying to say. So
Yeah. And
there are parameters that you have to track that are realistic, not what is the win rate 3 days from this close. It's good to know
Mhm.
that, but it
Yeah.
doesn't really capture this part, which I feel is most important, is what is the market? Is it a risk on environment? How do you define that? Maybe over a span of, say, a month, there were 8 HV setups, right? Now,
Mhm.
when I see the TL gappers watch list filling up with a bunch of gap ups, that's a risk on environment. So maybe that's a
Right.
parameter that's more realistic than saying a 3-day gain from this. And if it's an 80% win rate, wow, I have a holy grail. I could just automate this, sit on a beach and do nothing, right? So try to keep human intuition as part of what you're doing, not just these people. I mean, people come up with these stats of what's happening 1 to 3 days, 1 to 4 weeks, 6 weeks, and like 3 months from this particular bar. It's nice to have those, but it doesn't really capture the reality or the market condition, which I feel is the most important, because everything works. Every indicator works. Every edge works in its own specific time window or span or market condition, right?
Yeah.
Even the RSI works if you use it properly, or if you choose stocks with RSI of greater than 90 and you tie that into a specific market condition, even that edge will work. It's a matter of finding when it's working, I think, which is more important.
Yeah.
Yeah, go ahead.
Yeah, no, I think you did, and I was on this the other line that you're saying is, I guess it's important, but I think market conditions are more important, because that's exactly what I was doing. Is 4 weeks from that HV event day, or 3 months from that HV event day, has it violated that HV, let's say, close? And if it has not, and it's given, say, 20-30% return, out of the overall 100 sample size, is it 30% of the time that's happening? And that's kind of mathematical or statistical approach I was thinking of having. Is, okay, if the win rate in, say, certain market condition is 30%, and I need to position size it accordingly, or maybe minimize my losses, and kind of work from that perspective. I think the market condition you're saying is also key.
To define market condition in that particular study, what you could do is you could say, how many HVs have there been in the past 20 days, right? If that number is greater than, let's say, 8 or 10, that can tell you that it's most likely a risk on environment, right?
Yeah.
You can minimize the number of HV. So how do you define HV? Closing range has to be greater than, let's say, 50%, or you can even raise it to 60%, right? Or you can settle for the best of the best, go above 75%, see how that plays in. But then you have to define, like in this market environment, how many HV setups have we seen work more than 3 days?
None. Probably, yeah.
That's mostly because the market is not behind you, right? Now, if we take the same thing and we hypothetically move the market above the BP level, or IBD uptrend, or above 8 EMA, what have you, you'll see they will start working a lot more than just 3 days, right?
Yeah.
So I feel that part is very important when you're
Yeah, I did have multiple different columns of the DCR or even the gap, percentage, gap up percentage and whatnot, and volume run rate on that HP event date. So I think yeah, I get the answer. Thank you for that, Ray.
So I'll carry on. I don't see Ron has a question beyond BP. Are there any trend indicators you recommend looking at? Yes. You can look at the power trend definition by IBD. So that was one I think Mike Webster came up with. This is certain closes above the 20-day. I think three closes above the 20-day, and then it's sort of, this definition is a powerful one that you can study for yourself to look at trends. You can look at from a moving average perspective. A lot of people tend to say that, if the NASDAQ is above the 50-day or even the 200-day, the probabilities of you, especially people that are working full time or can't be at the desk or what have you, you can use these definitions to avoid those volatility periods and get in when the market is trading above those levels, or start looking at the markets when it's trading above those levels. So there's a lot of ways you could go about it. You could say in a downtrend, when the market's below 200, you can have conditions of, at the very minimum, be above the 10-day. That can work as well. So those are few ways that you can gauge what's going on in the market. Ron. Getting convictions from historical examples is hard. I have hindsight bias as when to look at winners. It seems obvious. Just okay. Yeah, that's a great point. It's hard to get conviction. So that's why it's important to do both, because if you try to just study, you run this and you find 20 years worth of examples, that's good. You could visually see what's working. You could come up with new entry tactics. Personally, the way I've come up with, something like a structural base or the whole number, the uppercut, hold and hold levels, is doing historical studies to see how can I get into this, into these type of stocks consistently. That comes from historical study, but nothing beats going through several market cycles in real time, gathering information and doing that day to day, week to week type of approach. Nothing beats that, in my opinion. So the slide on warning. So you have to do this yourself. And if you try to follow someone, it just won't work. You have to get your hands dirty to actually go do this by yourself, not sit on Twitter, YouTube, watching someone do something, trying to mimic them. You do that, it might work in a good market condition. It won't work 80% of the time. You can sit on any, you can follow Paul Tudor Jones on YouTube if he did live streams, and it just won't work for you, because that's just how the market's built. You have to do this yourself. You can't follow. This is non-negotiable. You have to go and put pen on paper. If this pisses you off, it likely means that you just don't want to do it. If you were expecting a shortcut coming into this webinar, and you thought I was going to, somehow present you with some magical way to study the markets really quickly in 1 to 3 weeks, and it didn't happen, well, I'm very sorry about that, but you have to do this yourself. You have to, open OneNote, actually do it, print off charts, actually look at them, and not just sit there. I see a lot of people just scrolling Twitter looking for this one setup that they could just have some sort of shortcut. If there was a shortcut, I would have found it a while ago. But if you want to go do that, find a shortcut, go ahead, you can do that. But at the end of the day, if you're not going to do it yourself, you're not going to internalize it, if you're not going to do those things and get your hands dirty, it's just not going to work for you in the long run. And that's just the absolute truth. You can challenge that claim if you like. For me, that's my personal opinion. When I actually sat down, actually studied historical winners, actually marked them up, printed them out, placed them in binders, looked for my entry tactics on my own, right? That's when it really clicked for me. The sooner you get to, that point, the better it is going to be for you. A lot of people will delay or not come to terms with that because they just want to sign up for something that gives them a result or something, some sort of outcome right away. Not going to happen. I'm sorry. There's no shortcuts. If you're expecting one, since you paid for the service, there just isn't. We're here to sort of guide you on what is working, what's worked for me, and that was do it. Go and find examples yourself. It takes time. You're not going to make a lot of money without going through these exercises and doing them yourselves. Let's get to tools. There are a few tools that I use on a consistent basis. I think one of the best ones is this bar chart. It's called Top 100 Stocks. What they do, I think they're starting to go historical now with this, is every year they have a list of stocks that are performing better. I think they call it weighted alpha is what they call it. And it gives you a list of the top winners in the market every single year. And I think I have a few lists of those saved, but they don't really keep a history. So you have to check, right around December area to download that list so you can have it. This is one of the really good resources to find some of the biggest winners in the market and to find a common thread among those winners. So I highly recommend you bookmark this, or when I post a presentation, you'll have this URL that you could bookmark. The IBD yearly winners list. So they post the top winners every year. And something you'll notice is in last year's 2021, the top winners were GME, AMC type of stocks. Now that's results in a really good question is, those stocks did move at a high clip. So what was it that was common amongst them? Is it a edge that you need to develop purely based on social sentiment, right? Or why is it that those stocks went up so much, whereas the traditional growth stocks didn't really do that much last year? So it gets you to question some of the things that we do daily, which is a good thing, I believe, to not just, be very rigid about your approach, but it gives you a good perspective on what were the biggest winners, what was the common thread, and is it something that you need to improve or expand your horizons on and trading. IBD a while ago, I feel these are on Amazon. This third point is top stocks. I think they could discontinue these now. They don't make them, but this is a resource if you want to go. I think they might be on Amazon or IBD's own website. They used to do a yearly book on the top stocks, and I think they just do a digital copy now. But that's also a good resource on. It gives you a really good fundamental perspective on what the top winners were in the growth space. So that is something that you can also look at to find big winners in the market, and then come to what's the common thread among them. A simple one is run a performance scan. You could do this on TC2000, Thinkorswim, and you could say, close 500 days ago versus the close today. What are the biggest winners? You can look at that list. One thing you can run is on a quarterly basis, you could just run year-to-date winners just to see what's going on, what's working, what isn't working, and what's up the most. Why is it up the most? That's something that can constantly give you feedback. In the markets, you can do this quarterly, you could do this monthly, what have you. But this also gives you a list of winners that you could take a look at. See, is the HV edge present? That's your real time. These things are your real time studies, day-to-day studies that are ongoing, versus the automation, which is completely historical as well. So those are some of the tools, very basic. The last one I didn't mention is our model books. You could pick up those stocks. I think it's 50 plus stocks. You can get a list from those, look at what's common. How do we come up with this launchpad setup that Ross talks about? It's just, we noticed this happening with respect to moving averages, converging at this point. And then it seemed that stocks on a consistent basis had a really large move to the upside after that. So you do these, you know, you look at the yearly list, you look at the top stocks, you look at bar chart, the top 100 stocks on a yearly basis, you run a performance scan, you'll come up with things that you'll notice are common threads among these winning stocks. So those are some of the tools. Just to summarize, I think the real-time study, nothing really beats that. You could do historical studies. I'm not saying don't do historical studies. I'm saying this, nothing beats this. The day-to-day gathering of examples, clipping them, putting it in your OneNote or printing them off, and sort of visualizing everything as you go. Nothing really beats that. So the last slide is questions. So we'll take questions as they come. IBD used to sell them up until 2019, did a digital version on 2020. So yeah, I think Bob is referring to these IBD top books, which I feel they should have continued, but they were really good resources in my opinion. Can I get the 2021 model book? Yes, you can. The link is posted on the forum, so I won't be sending you an email. You could just log into the forum, look at the model book post. It's right. It's on there. Would it be fair to summarize that one would have multiple ongoing studies at the same time, focusing on continuous improvement along the way? One should not put a time frame around it per se. Yes, Michael. So you can have multiple things going on at the same time, sort of study them day to day. There's nothing wrong with doing that. And as you actually go and do these, and we'll release a white paper soon. The idea is to with DeepView, we're gonna release a full white paper. We're gonna release a full white paper on the gappers edge or the high volume setup edge, which will have highly statistical stats plus what kind of market conditions things work in and don't work in. That might give you guys a really good idea on how I go about doing a study. We'll list historical examples, we'll list stats, we'll do the whole thing. So that might be a good resource when we release it. Already answered the trend indicators question. How do you define a setup as working? Well, I think we discussed that at for historical review of events, what's the best source of data? I would say TC 2000, I think goes back to, if I'm not mistaken, it goes back to 1970s in some instances. If you get like the top edition, you can also, I know Thinkorswim is restricted in terms of historical data. We're actually procuring data back to 1970. That's our goal with DeepView. So maybe someday DeepView will have really a large data set. But I'm trying to remember if anything. I would say, I mean, TC 2000 probably has the most historical, but I'll get back to you on that, Sneal, if I do have something that goes beyond the typical ranges that I see in most platforms. The last question is, what position size should I use if S&P is below BP? So rather than asking me that question, Frank, I would revert it back to you. What do you think you should be using for a position size when below BP? It's whatever you're comfortable with, wherever you are in your phase. Now, a lot of people don't tend to like that answer. Yeah, well, the obvious one was MarketSmith has the best historical data. Yeah, I agree. I just tend to overlook MarketSmith. So back to Frank's question, which is, what's a position size below BP? I can't tell you that. For me, it could be 12 to 18%, but that doesn't mean you should just go blindly and copy me for that position size. It really depends how many years you've been in the markets, what you're comfortable with. What is your size above the BP level? It has to be relatively lower when you're below the BP level. So that's a question. That's a relative question. It's not for me to say you should have 5% or 6%. It's all relative to how you position size above the BP. For HV study, any sneak peek screenshot of DeepView? That's a good question. Maybe we'll post one on the forum. We do have a staging environment. We're getting closer and closer. But I would have to ask the team if I could actually share something, Steven. But it looks beautiful. The functionality is going to be there. We're going to have a members only release with what we're going to call a founders edition. It's going to be a lifetime deal, so you'll pay a one-time fee for you'll get to access DeepView and install features forever in the future. The fee might be a little steep, but also reasonable when we break it down into what our roadmap is. We're going to add journaling, alerts, and sort of make it all in one eventually. So it'll be worth it, the price itself. For H3 study, would you suggest excluding certain industries like biotech and utilities? That's a good question, Sunil. So from a group perspective, I mean, utilities, how realistic is it that you will trade a Campbell's soup and Johnson and Johnson when you actually are trading? So your studies should be reflective of what you're actually going to go and do in the markets, not just these hypotheticals that you dream up. So for sure, I would exclude utilities or Campbell's soup from it. When doing a study, do you use a small? Yes. So that's a really good question. So the question is by David, when doing a study, do you use a smaller position size until you see your edge? When I'm studying something in the markets, when I started looking at the futures market, I started with one contract to develop a feel for a span of, I would say, 16 to 18 months. I would just use one and I would restrict myself to one. It was really good when you made money and it would move a lot. You got a 3%, 4% rally, would yield a good return. But you have to, I started with one. Now I have a minimum of 10 that I go with. That's my comfort zone. So when, as I go through the iterations and develop that edge, I'm getting more and more confident, and my sizing is sort of reflective of that. So I'm still fairly new to the futures market. I keep it to 10 contracts at the moment. That's just my comfort zone. And I don't plan on, going from 10 to 15, in the short term, but eventually the goal is to get there one day. Can you post the link to the model book or how? Yes, I will post that on the Twitter feed for you. Do you suggest any drawing tools to draw? I think Stock Charts has a really good annotation tool. I tend to use Stock Charts a lot. A lot of the printed charts that I have are from stockcharts.com. I think their annotation tool is really good. I haven't tested the annotation tool in TradingView, but a lot of people tend to use it as well. So try those two out, Bays, and you could come to a conclusion on what's best for you. Well, the details on, I don't want to talk too much about DeepView and how we're going to do the rollout, but it's going to be fair. It's going to be, we never go about just asking. We'll present, a vision and what we have, and you guys can make your own decisions. So I'm not sure how exactly that's going to be rolled out, Sunil, but we'll get there when we get there. You'll get emails, Arun. So your question around, we'll be emailing people, we'll be posting it on Twitter. So no, you will not need a TV subscription. We'll be using the TradingView API to integrate it natively into the application, but you will not need a TradingView subscription. You'll not need any other additional subscriptions. James posted the model book. So any other questions, and we'll wrap it up. We're closing in at about 1 hour, which is perfect amount of time to be respectful to people. If no questions, I will end it there. I hope you guys found this useful. I can post something on the forum as well with respect to some of the studies that I've done. For me, everything's charted out. I chart year-to-date winners. I visualize everything so I could go back, 2020 all the way to 2010 to 2005 to 1990, study IPOs in the early 80s. And the more you visualize, the more you'll see what's working, the quicker you'll come to terms with, I know this was what works for me and this is what doesn't work for me. So with that, I will end it here. If you have any follow-ups, you can always post them down in the comments of this webinar when it's posted on our website. And with that, I wish you guys a good weekend, and the weekend routine will be out shortly.